Hi, this is Jeffrey Cohen, Chicago Quantum. It's week 6, February 7. Today we're here to talk about general market overview, market insights. We're not going to go into detail on the Chicago Quantum net score. We're much more focused on just overall market trends, things that we're seeing, insights, hypotheses, and places where maybe we can take our analysis and where you can maybe profit from the market. So things that we're seeing. First thing I wanted to point out is the overall market. Now these next two charts you're going to see are actually screenshots because I didn't want you to see the stocks that we own right now. Try to keep it focused, no position in any of these stocks. So S&P 500 is the candles or the colored bars, and you see that's down 4.3% over the last 2 months. Purple is QQQ, is the NASDAQ. That's down 7%. IWM, the Russell 2000 small cap stocks, this is down 9%. You see that it actually, all three of these indices reached a low on January 27. And so they've been slightly recovering since then. And so we're in a context of a declining market, a tough market right now. I'll lower that. So I also wanted to point out that inflation is real. I know that we had talked about inflation being temporary, but I'm not sure anymore, right? So now you see companies like Tyson raising prices. So inflation is running what? 10%? 5%? Well, Tyson raises the price of beef 32% in a quarter. And we're seeing that at our own local grocery store. Chicken, they raised prices 20%, and pork, they've raised prices 13%. And you think about it, you're sitting in the boardroom at the executive suite of Tyson, and they're saying, look, we're going to raise our prices. We're going to double our margins. And if the people can't afford meat, let them go buy it from somebody else. Or let them eat grain or soybeans or something. Because you know what? We're going to grow margins. So Tyson's operating margins grew to 11.3% from 6.7% a year earlier. So I want you to think about it. Tyson's raises prices, drives up operating margin. The stock, it's up tremendously. The stock is, up tremendously relative to the market. It's down, it's up 7.5%, 7.3% over the same, actually it's over a 1 month period. And most of that gain is right now. It was actually down 2.5%, but they came out and said, look, we raised prices, so it gapped up. Compare that to Dollar Tree. Dollar Tree's in the green here. Dollar Tree is only down 5% because Dollar Tree raised all their prices 25%. And they've made it stick. Now, to be honest, our local Dollar Tree, so we've stopped shopping there. Do you know that the stickers on the windows from when it used to be $1 are ripped halfway off the windows? There's help wanteds all over, and there's old advertisements. I'm guessing there's not a manager in the store. The stores look dirty. They got plenty of merchandise for $1.25. But my guess is, that Dollar Tree price raise may not stick because the quality of the store experience, at least in our store, is going down. Compare that to Clorox. So Clorox came out this past week. They're in the gray. And they they were down 7.5%, and now they're down 18.5%. So, guys, that's crazy. That's a big drop because Clorox did not raise prices. Clorox has kept the faith, and if you think about it, Clorox has a mission to help people not die of COVID. And so they probably didn't want to raise the prices of all their products. But in this case, the market punished them. And so what I would say is inflation is here to stay. You're seeing it. And so any company that's like Clorox, that is not raising prices, that is focused on delivering value to the customer at the expense of their own margins, my guess they're going to get punished through earnings season. So I wanted to talk about that. I thought that was very important. I also want to talk about something I noticed. I noticed this on Sunday night. I was getting ready for bed. I always like to look at the market. I like to do a couple of tweets about where I think things are going. And I want to introduce you to the concept of the head fake. The pre-market head fake. And I know you're probably thinking, Jeff, what the heck are you talking about? A pre-market head fake. But it's there, and I want to talk to you about it. So I'm getting my my chart, my pictures ready here. This way, yeah, there you go. All right. So here's what I noticed. First thing I noticed was, this was last night. This is Sunday night. All the U.S. indices were down. The Nikkei is down. The VIX is up. Bonds are up. Bonds are up a lot. The 30-year bond was up almost a full half a point. It was 0.56. It was actually more than a half a point. And then the price of oil is down. So let's do the math here. So oil is down a little bit, but oil is like 91.50, right? So oil is tremendously expensive. The Nikkei is down a little, half a point. US futures are showing down, but interest rates are down. And so I know interest rates are down. Oil is up high. Oh, and look at this. Bitcoin was trading at 42.6 when I looked. The high was 42.7 over the period. Bitcoin's up. Energy's up. Interest rates are down. You know what I think? I think it's risk on for Monday. I think the small caps are going to open much higher, and I think this whole futures being down overnight is a head fake. So I published a tweet. I said Sunday futures prices are a head fake. Don't trust it. So risk on for Monday. I got a like, I got a retweet. Point is, this morning the markets were up like crazy. My portfolio of small cap stocks was up like crazy this morning. Now, it's not up now. The market has decided to take a little nappy midday. Take a look at that. It was up quite a bit. It got up to 45.18. It's now down to 44.89. And if you look at it over the week, you see that you usually see a little bump in the morning, and now but this is a pretty nice bump. It came down. So futures were down, but actually the market opened up. But you can see the S&P is still really struggling to lock in any gains. A couple things I wanted to talk about. So I don't know if you're big on like militarizing our border, but there's been some movement to militarize the border, and I want to point it out to you because it's kind of cool. So we actually shared a tweet, see if I can find it, on the Ghost Vision 60. I thought this was pretty cool. The Ghost Vision 60 is a mid-sized, high-endurance, agile and durable, all-weather ground drone that looks like a doggy, navigates autonomously or can be controlled manually on the border, and this robot drone can be equipped with numerous payloads. And the reason we shared it is because these robo-dogs, or these drones, are being deployed now on our border with Mexico. And so, we're hunting down the illegals. And so I struggle with this because this is militarizing our border, right? These guys today, I don't see any weapons on it, but there's no reason that you couldn't mount weapons on these. And they can act in an autonomous fashion to neutralize threats, except this is our border. These are people maybe coming over to work or to live here. And I just want to show you, this is the Vision 60, right? This is a drone. This is a militarized drone. And the way you deploy this, let's see if they're going to show the pictures, is you would mount a camera in the area, or maybe use some satellite or an aerial vehicle, and then you could communicate to each of the doggies here, where there might be some movement or some heat signatures, and then they can kind of move in and converge on the area without the immigrants knowing about it. And depending on what kind of payload you put on these things, it depends on the response. And so, they were deployed at Tyndall Air Force Base. It's fascinating. Government and enterprise applications. They're unstoppable. they can write back up from any slip, fall, or failure. I don't know what the law says, but my guess is that you could make it illegal for somebody to mess with it. You can have it deploy a flying drone. You know, and here's the picture that really spoke to me, was the idea that you can, oh my God, it's got a sight on it. It's, bomb squad stuff. This is pretty heavy duty, can go in water. It's kind of cute. You can imagine it, right? It can break into homes. It could unlock your door. It can do lots of stuff, right? Dynamic robot. So we're going to have this on our borders. And so I just want you to think about that. So we have an administration right now that says that they love the immigrants. They welcome them with open arms. They're shutting down private prisons. Unfortunately, that means when the immigrants come in, they're putting them under bridges and stuff to sweat in the heat without proper bathrooms or enough fresh water. Let them all get COVID. And now we're sending out the rocket drones. So it kind of struck me, right? This is a big deal. We're sending out drones. So I just wanted to share that with you. That was something else. Let's see what else was interesting. Oh yeah, just stocks I wanted to talk about. So if we look at the market over the past week, this is 1 week performance. So we had talked about it being like a down week, tough week, but there were certain sectors that did well. The diversified banks, the top 4 banks, did well. They were all up last week. Amazon, Tesla are up last week. Facebook down 21% because of earnings. AT&T down because they finalized their divestiture, but Google's way up. Disney's up, Netflix is way up, and some stocks are down, but these are all like story stocks. And so I wanted to share that. I want to share the employment results. Wow. Total non-farm employment rose almost 500,000 jobs in January, and the unemployment rate was unchanged at 4%. So what does that say to you? That says more people are returning to the workforce. Yet, there's no change in unemployment. So, we're getting people back in. Now, I look at this and there's 2 ways to think about it. One of them is with the guise of inflation. Things are getting tighter out there. It's harder to feed a family. It's much harder. It's like $4 a gallon to fill your car with gasoline. People are going back to work all right. Maybe even 1 or 2 jobs. It doesn't matter if you're going to get sick with COVID or whatever, you need the money to live, right? And so this is one of the things that I see here is people are coming back to work. What's interesting is where are they coming back to work? Leisure and hospitality. Maybe as COVID starts to roll off, right? Professional business services, that's my field. Retail trade, transportation and warehousing. So people are starting to move back into the what I'll call Main Street economy to try to get this country back working again. And so I think this is good news for Main Street. There were some stocks that we like to follow. So ATI Physical Therapy is a recent SPAC. So it was trading at $10, right? You see it's now $2.91. It's down over 70. Wow. It's down a lot. It's down 71% since it went public at $10. And the thing about this company is they're really suffering from the rising price of wages, from the inability to find people to work. People may be being scared and staying home. But personally, I like this stock. I don't know what price I like it at yet, but this is one of those high risk, no profit stocks that you should be watching. Geo. I love Geo at this price. I don't own it, but if I'm you, I want to own the stock. I love the stock, right? Geo's awesome. Geo operates private prisons, and when those robo-dogs start bringing in all the illegal people trying to cross the border, the people that are crossing the border illegally, or drug smugglers, or killers, or whatever, or maybe rabbits that weren't supposed to be out there, you got to have a place to put them, and the place you're going to put them is in private prisons, because you can't build new prisons. It's not politically sensitive. We're all like, defund the police now, but to be honest, you need a place to put the bad guys and women, and that's where it is. And so their stock is down. If we look at that stock over 5 years, let's look at it on a weekly basis and get rid of the comparison. The stock was a $30 stock. 2 years ago, the stock was a $17 stock. 1 year ago, the stock was an $8.50 stock. This stock has just been down, down, down. And so what I would say is, don't be afraid of taking a position in this stock, because I think once the Get Tough on Crime crew comes back in, these guys can very quickly buy up facilities. They're money conscious. They're tight. They control costs. I like Geo. I like Geo at 647. Again, we do not own the stock. We are not going to take a position right now. This is not a pump. This is just giving you a call here. I like that stock. Verizon. We used to be long Verizon at about $50. It's now around 53. Verizon's really been struggling. Verizon's like an up, down, up, down. I think it's the 5G story, but I also think this is an interest rate story. As interest rates rise, the dividend, the 5% divvy, 4.8% divvy that everyone talks about, it's worth a lot less. Where's interest rates now? The 10-year they're saying is at 1.92. So it's not quite 5%, but every time that interest rate goes up, the 10-year U.S. bond or the 1-year U.S. bond or the 30-year bond, it makes stocks like Verizon, slow, low growth stocks with a good dividend worth less. Let's talk about Kimberly-Clark. This is one of those inflation destroyed by inflation kind of stocks, right? And we had talked about this, about the range this thing was trading in, about 140 to 130, and you see how it climbed almost all the way back to 130 earlier this last week. Well, it's interesting because it's down about 133.76. It was 132.66 on Friday. This is a stock that we think may test its cyclic lows, and even regardless of any day-to-day, of any news on this stock, it's just range bound for such a long time that we think it's probably going to stay range bound for that time. It's got years of range in Kimberly-Clark, and so that's one. It's a low volatility stock. It's generally a low risk stock. I don't know. Interesting stock. We look at Clorox. Now, it's interesting because today popped back up. This was one of those stocks where they just got punished on Friday. Look at that. Look at that drop on Friday. They were trading flat as a pancake in the 165 range. Boom. 145. 140. It hurts. But Clorox is one of those where they're probably raising prices today. Okay? Alibaba. Alibaba is interesting because this is one of those Chinese stocks, and I personally don't have any real knowledge of doing business in China. Last time I was in China was probably 4 years ago when I was with IBM. Did a bunch of trips, met with clients, really got a good feel for the business back then, but not since COVID. And so you take a look at this stock, right? It climbed from 175 to 300 over the past year, and it's down to 114. And so I just hope you didn't ride that thing down. That's painful. But tough to call, right? Where's the bottom on a stock like this? I don't know. I'm not going to try to call it. But I think it's interesting that Bridgewater went on the record touting Chinese assets. And there's some context to this, but they're saying that China is loosening its economy. It's pumping money in. It's adding liquidity. That China is a counter-cyclical play to the U.S. right now. And so they're saying hold Chinese assets as a way to hedge U.S. assets. We have different ways we think about it, but there it is. There's your Alibaba. So let's actually play that against its comparison stock, because maybe there's something to this. Let's compare it to Amazon, right? Alibaba, Amazon. And let's see, are these divergent? Yeah. So Amazon's up, Alibaba's down, and maybe with reversion to the mean, Amazon goes down and Alibaba goes up. So at least you've got stocks that move differently. I hope that Bridgewater didn't say to diverge 10-19-2020, because then, Amazon would have been relatively flat and Alibaba would have been down 80%. So depends when the call was made, I guess. What else do we want to look at out here? I had a whole bunch of stuff for you. Workhorse. I like Workhorse, right? I love the story, the American dream of making an electric truck that will serve the last mile delivery. That's been a tough stock. And I think as long as growth is down, basically what I affectionately call not very good stocks, right? No profit, small cap, experimental, limited revenues. It's going to take a while for stocks like these to come up, but if you're a longer term investor, stocks like Workhorse, if they can get the trucks produced, it's going to be a great stock. Now, our model's been picking stocks like RIOT Blockchain for a while, for Mara, On Semiconductor, HUT. Those are stocks that it likes, and today those stocks are up. So stocks that the model has liked are up today because the model really likes Bitcoin. It likes the stocks that work around Bitcoin. It doesn't like Bitcoin itself, but it likes the stocks that work around Bitcoin. It likes SI. Take a risk here. How's SI doing? No, not Silver. Silver Lake. Capital, SI. Hang on. Silvergate Capital. Yeah, loves it. Up 2 3/4. It was up much higher earlier today. Look at this stock over the past week. It was picked. It likes it. It likes the stock. The model loved the stock at $96. It's $114. So it still likes the Bitcoin stocks. I was going to talk a little bit about the pot stocks, but at the moment I just want to go back and look at the trending tickers on Yahoo Finance. Where are we at? See if any of these are picked. Any of these are interesting. Funware is a down stock, but it's up. Oh my God. It's up on 74 million shares. It's up almost 50 cents, up almost 20%. So there's one of those that we say to avoid or short. On semiconductors, one of the ones we say that go up. And not a lot moving right here that we would have called. Goldman. So Goldman Sachs, if you guys want to send me your premier newsletter, your premier subscription newsletter, we would love to have it. But there was talk here about how the market hedged by buying puts late last week. And they say they changed the market overnight, right? And so because the market bought so many puts, it actually didn't mind if it went down. The fear was gone. The liquidation panic was gone. Because the money guys out there, the big funds, were going to make money if the market fell anyway. So they're naturally long, but it actually said that they went short. And what's interesting is that the world went longer. The world had greater equity inflows. However, those inflows were rest of world, not into the United States. So there's a rotation to rest of world and a rotation away from U.S. stocks. But in general, people are pumping money into equities. You see that U.S. equity funds, zero cumulative since the start of 2020, but non-equity funds is up quite a bit, $800 billion. And so there's a cycling of money out of the U.S. into foreign countries. Not sure what that means for you and me, but it's a big deal. When we look at equity, global fund flows to equities are up. You look at it here from 2020, you see that straight line up. Equity flows are up, almost $1 trillion. Equity flows, this is bonds. Bond flows are way up. And cash is flat. And so people took a lot of this extra money that was sloshing around and they put it into fixed income. Right? Bond outflows are not common, but they just started to happen in the past month. So now, where's that money going? Bond funds, which have sucked up almost all that extra liquidity, right? Boom. If they're going to start to outflow, it's either going to cash, it's going to equities, somewhere. It looks like now it's going to foreign equities. Just so interesting when you see the market. Now, what does that mean to you and me? It means buckle your seatbelts. Because I don't think the market correction is over. I think there's a lot going on, and so you just got to pick your bets. This is our cannabis index, right, which we also just put tobacco in there. And you see the cannabis index is mixed right now, which is actually pretty good because it means people are looking at individual stocks. Crypto is way up. Our crypto index is through it's through the roof. The down stocks that we pick on January 5th, interestingly enough, those down stocks are, looks like they're mixed about 50-50, red and green. And so today the market lacks direction. Today the market lacks focus. And so that's where we are. And if you look at the actual market indices, they're up and down within a quarter point, within a third of a point. And so not much going on. Hope you have a great week in the market. Hope you found this valuable. If you did and you want to learn more, please check us out. Check out our website at chicagoquantum.com. We share our latest insights, not every day, but we do share them. We talk to you about our up run and our down run. We are a registered investment advisor in Illinois. That means if you're in Illinois, absolutely call us. If you're not in Illinois, you can still absolutely call us, but we're limited in the number of clients that we can serve. We are a founding member of the Quantum Economic Development Consortium, QEDC. We maintain a Better Business Bureau A+ rating, and we were profitable last year. We would like to attract some new clients so we could be profitable again this year and do some hiring. So please give us a call if you're interested in this kind of thing. We would just love to chat. This is what I look like. This is the phone number. It's the address. There's my email. Just reach out. We like it. We want to talk to you. You don't have to pay to talk to us. We're not like some of those other firms. And our brochure is posted in numerous places on our website. So please check out the brochure before you invest and take a look. And then also if you like Twitter, we're out on Twitter. We're Chicago_Quantum, and we do post our videos. We just posted this morning's videos on the top 50 stocks. So take care now. Good luck in the markets. God bless you. Have a great week. Bye-bye now. Finished, honey.